the Zen Garden.
This is so different than the one our other music was.
I didn't hear what you said. Hello, everybody. Today is September 19th, Tuesday, and you're listening to the Daily AI Show live on all the major channels, including LinkedIn and YouTube and TikTok. So today we are talking, what are we talking about, guys, today? We're talking about investing in AI. Is this the next .com big up and big down? Are we about to crash from all these companies that are getting all this money and these seed rounds and these big billion-dollar checks from Microsoft and whatnot, and then it's deja vu all over again? They're all going to just crash and everything. Is that what's going to happen? I guess that's what we're going to talk about today. So, who's got a hot take on this one? Investing in AI.
I'm not going to say a hot take, but I just want to warn everybody who's watching or listening. This is not a financial advice show, so we gotta.
Yes, 100%. I'm going to give you good advice. Buy Nvidia stock 6 months ago. So get in your time machine, go back 6 months, and buy Nvidia. Daggone it! I mean, I was so mad at myself. Anyway, so so not financial. Obviously, we're not claiming to be financial advice, and so we can't predict which companies are going to be going crazy and whatnot. But what you're constantly seeing, almost every week, you're seeing partnerships. Like I was listening to the Marketing AI Show podcast, and they were talking about all the enterprise, getting in bed with each other, like Ernst & Young getting in bed with I forget who it was. I think it's OpenAI, BSG or BCG getting in bed with Ampere, getting in bed with some other companies. So I think it's Deloitte. So what they're doing, basically, these big enterprise consulting firms are getting in bed with a lot of these big AI firms. And there was one out of, was it India? $100 million was given to Anthropic just so they could build a model for them. So I think you're seeing these big enterprise companies trying to partner with these big language model companies to try to get ahead of their enterprise use cases, which I'm not sure what that means for everybody, but they're getting flooded with money, right? And it's going to, again, I love this because it means that the big dogs are getting lots of opportunity. Big dogs meaning like Coke or Pepsi. Those big enterprise companies are probably trying in talks with a lot of these language model companies to see how they can upscale their organization. But who's being left in the fodder is those small, medium-sized businesses who are too small for Deloitte and BSG and all that people in EY. And I think that's great for companies like that we work for or that we consult for. So at any rate, whatever thoughts y'all have.
I'll say this is a very disruptive and transformational era that we're living in because of AI. And I think for the long term, you can't lose by buying quality companies that are investing heavily in AI. The idea that a company like OpenAI, for example, would be so disruptive that it might put a big dent in Google's future, I think is proving, based on the discussion we had just yesterday about how Google's search generative experience is actually changing the experience of people using Google and in a positive way. I think that portends that the bigger companies, the ones that have the ballast to survive through a transformative period, are the ones that are going to benefit. And that's what investment advisors that I'm not a big investor and I don't follow them carefully, but the ones that I do read are basically saying, hey, buy Microsoft, buy Google, buy Meta. And that's what they've been saying for years anyway. So it's not like it's going to transform the investment landscape, but it is definitely going to cause some turbulence. There will be winners and losers, as there always are. Let me just say this about the smaller scale players, the ones that are emerging and the opportunities that are presented there. I think it's really too early to say which one of those will be big winners. There are a few that are, definitely, surfacing, but there can be such a big shift that happens as a result of, just some small change in feature set or distribution power that you can't really predict that, oh, this particular small company is going to be a big winner on the landscape. About 6 months ago, I might have said, look, all these companies have these incredible opportunities to build around a system stack that's going to deliver enterprise chatbots to every company in the world, small and large, and there's many of them. But all of that can be seconded instantly by the delivery of a novel interface. And we just talked about this one yesterday, harpa.ai, which puts a wide range of the things that you can deliver in a chatbot right in your browser. And what a perfect, like disruption of the whole idea of the UI, UX of a chatbot, to instead put it right in your browser like a browser bar. So it's too early, too soon. But looking again at the long term, if you were to buy a diversified basket, like different layers of the stack of all the components of the AI architecture that's starting to emerge, if you were to buy a piece of that, including the chip manufacturers, including the go upstream from that to the ones who are developing the support for the silicon that are being included in NVIDIA and AMD devices and Taiwan Semiconductor, and then you go to the major players who are delivering AI. If you bought a basket of those, I think that's probably a better return in the long term. And I'm old enough to say the long term for me is 10 years, not 50 years. But you can buy that, and that will do better than most any other investment strategy that you could conceive of today.
Yeah, okay, I'm gonna ready for your my pushback on that. So at the very beginning, I was of this whole trend 10 months ago. I was like, yeah, the ones who selling the pitchforks, those are going to be the ones that are making money, right? Or the ones who are selling the cotton gins, or selling the pieces that make up the technology. I was really on board with that. And maybe 10 months ago, if you did invest in NVIDIA, that was a great play. But as I'm hearing from a lot of these smarter people, like the All In podcast, these guys are billionaires and they invest in companies, right? And their take is this land grab is about to have a drop, because what you're going to find is everybody's buying off these H100s. Everybody's wanting to build this farm in order to create these language models. But their gut is telling them, and my gut is too, the technology behind a transformer is going to get just better and better. It's not going to require as much technology or much hardware or much power or as much water, as we've heard recently about the water usages from OpenAI, right? I think that as it gets more efficient, there's going to be a mass dumping of all these products, and you can't get your money back for all these millions of dollars you spent on this hardware. So I agree that it's still kind of going up. I'm cautious that I think it's going to have a big drop, because how many language models do you need?
I just saw this. Oh, go ahead, Carl.
How does this compare to the .com era? Right? We've seen all of this investment. We've seen 200 billion growth in the marketplace.
I'll tell you exactly.
Robert, you're from people you're hearing, you're seeing there's going to be a drop. Is that indicative of the concept of the bubble?
Yes, because in .com, because I was around and Andy was too, or maybe somebody else was, I don't know. But during that time, it was massive overvaluation of companies. It was ridiculous. Everybody was, the .com stock prices were ridiculously overpriced, right? And then it crashed, which is what the .com boom and bust was what we're talking about here, right? And so I think exactly that's how it's going to mimic, is overvaluation of tech companies.
So do you think they're overvalued right now?
Yeah.
By
I don't think so.
Enough. Is it just that it's growing off of the initial hype and we're still on the hype train? Or are we looking at a huge overvaluation and going to have another giant crash like .com?
For the money that people are throwing at these little startup companies, if you read the is it the Andreessen Horowitz article, the number of companies that started in the last 9 months, 80% of the companies in AI started in the last 9 months. What does that tell you about what's going on in the sector, right? People are throwing money at these companies. overvaluating three guys in a basement, right? I just don't think there's money there.
Well, would you even consider those actually AI companies?
Yeah,
right.
they're calling
How do we
AI
define
company.
an AI company? Just plugging into ChatGPT is an AI company, or are we talking about AI development?
I think that's a good point, Jimmy. I think that's a good point.
That's a good distinction.
Very superficial involvement with AI, although it's in the AI market space.
Right.
So hold on a second. I think I want to one point there, and to just back up Robert a bit. Y Combinator's latest batch of startups, I believe 60% of the group were all around artificial intelligence. So yes, from a actual startup, like everybody wants their, is coming up with ideas for what it is, and I do like, but we all know the tools that we're using, which is essentially a logo, what 95% of them won't be there in 3, 6, 12 months. It's that we know that. We know that they're like, oh, there's a bunch of them that are wrappers. But I do want to point out there, I think like it isn't just when we talk about AI investing, it isn't just investing in companies that create AI. It's companies that also, like, I would think of companies like PLTR, Palantir. Does anybody know what Palantir is? So
yes.
they are AI in defense and military. So, it isn't just a bunch of tools that people are using. It goes beyond. It's AI in government. It's AI in everything that I feel like everything that we interact with, that we drive, like all that kind of stuff we do every day. There will be an AI company in there, not just for us to use, but integrate it in some form. So I think like I feel from an investing perspective, it's buyer beware, like everybody, like every other thing. For example, like crypto last year, it was buyer beware, and people got caught up in a bunch of scams. But this time around, and with the technology moving that much faster, I don't. Besides investing in Microsoft, Google, like the really big ones that have the actual data and the financial resources, that's it's a tough investment. Like what are you looking at too?
Well, Carl, I think you pointed out like what is probably considered the biggest difference between .com and the AI train now is that AI is touching upon and is involved in all of those different industries, right? Whereas .com was internet. Some companies out there is like, hey, we got a website, we're an internet company, those kinds of things. Whereas we're seeing almost every single industry out there is going to be touched by AI, and it's going to involve AI in their process. So I think if we're talking about similarities and differences, that's probably the number one difference that I'm seeing.
Well, and also AI is advancing at a higher rate than other technologies have, right? I mean, there was the push in the .com era for the chips to double, whatever that law is that I'm not remembering the name of. But AI seems to be starting at a higher, I mean, it started many years ago. So, but now, if we're starting now, it is advancing at a higher pace, at a much more rapid pace, I think. And that just makes like prediction hard. And I think there's some environment, right? Like, I mean, there seem to be a bunch of things happening kind of at the same time in this context, all of which are going to influence each other, which makes the rapidity like amplifies that, I think.
So there's we're not any one of us going to be able to predict what's going on, but there are people whose job it is to predict what's going to happen in the space, on Wall Street, right? So I just pulled up something from Bank of America, which shows the implied upside over the September 7 close for a bunch of different major AI related companies. The the Microsoft says a 23% upside from where they are today based on their projections, where they have, AI assisted analysis of what's going on in that market space, right? Alphabet only 8% compared to Microsoft's 23%. Why? Who knows? NVIDIA 40% from where it is today. It's already tripled. And now they're saying on 40% on top of that tripled valuation. And the only one that's higher than all of those, just to bring in the international perspective on this thing, it's not just the United States that's investing in AI. Baidu has a 60% implied upside from its current stock price. So the consensus I take from that particular little illustration is that there's a lot more headroom available in AI's economic exploitation of the opportunities here.
Okay.
Yeah, unfortunately, lots of people were wrong about the real estate collapse of recent memory. If you remember The Big Short,
2008, yeah,
it rings a bell, right? So I'm wondering if a lot of these analysts are not quite as informed as not. I'm not saying we are more informed than them, but I don't know. You heard it here first. Short NVIDIA.
Again, not financial advice. Cannot sue
Yeah.
us. Or if you want, you just sue Robert.
Yeah.
Well, it's a strategy. It's a strategy to understand that I think that there is going to be a drop off. That's my thought process. But
okay, so let's shift a little bit and let's talk in generalities about the components of the AI landscape and which ones we think are really going to benefit from it. Now, you mentioned some skepticism about the pick and shovel approach to investing in the supporting technologies for AI development, and so I think that there's a lot of discussion we can have around that. But let's first move up above that and say, okay, let's look at the micro startup landscape and where are these things coming about that really intrigue us, and do those represent an element of the market that we might be willing investors for? Because they're all looking for money. All those startups are looking for money.
So you're saying what companies, technologies, or platforms that we would recommend, or not recommend, but we see as exciting enough to invest in? Is that what you're saying?
Yeah, like if you've come across something in your examination of the tools that have shown up on Product Hunter or wherever, and you say, okay, this one I'm really starting to adopt, and I think if I were going to plunk some money down, this is where I would invest in. So go.
Yeah.
You're asking a question that's really, I think, why earlier this year there was no money in VC. Nobody was spending money because they're so unknown. And I think that where I'm at right now is there's so many companies coming out of the woodwork that are going to be gobbled up by other companies or made redundant because of other integrations with the larger companies that I don't feel comfortable. I would, even though I like feel better or whatever, AI platform. Unfortunately, I don't see a moat strong enough to be resilient against the larger ships that sail.
Just as an informational question, if you invest in a company that gets gobbled up, to benefit as an investor in a way that obviously you don't if there's just a redundancy and Big Dog says, oh, I made that too, and so no, you do it. So that's a savvy investment or a risk that might pay off.
Well, they're acquired, yes. But that means their market share is a whole different thing.
Yeah, no, I'm acquired.
Yeah, acquired.
Yeah. Usually, if you are an investor in the company, and I'm not talking about publicly traded or anything like that, then the return upon the acquisition is when you check in your equity and get a benefit from it. So a lot of investors are looking for what your exit strategy is. and what that runway is,
So,
or what that roadmap
the
is.
question brings me another topic, Andy, if I may. So at WSL, we have something called AI Labs that we've created, and the whole point of it is to analyze and evaluate companies that we want to bring into our network that our owners can use and that provide AI products, right? And it's a very sophisticated way of evaluating the companies. And one of the key elements is, how are you funded? And so going back to your question, Andy, is we don't want to work with companies that don't have a strong base of funding, like aren't VC backed or whatever you want to call it, because then you won't be able to weather the storm, adapt, whatever, and obviously be around in a year. Because we don't want them to get in bed with our owners who get in bed with small businesses around the world who then end up having to switch platforms. So I think, as a roundabout way to answer your question, is I don't really know what companies I would invest in, but what companies I use are ones who have good investors.
Yeah. Okay. Great point. Well, let me add another metric that I think is useful, and that is something that we don't easily see. But I just saw this the other day, and so I just pulled it up. Top 50 Gen AI websites by monthly visitors. And so this is, who's really using these things, right?
Is that the Andreessen Horowitz?
I don't know where it came from, and I can't see that on my screenshot of it here, but right now. But anyway, here's a few of the names that are in the top 10, and then there's a bunch of recognizable names all the way out to 50 on this one. But ChatGPT number 1, okay, so that's OpenAI. Character AI is number 2.
Yep.
Okay. Who's behind that one, right? Is that venture funded? I bet it is by now. Number 3 is Bard. Number 4 is Poe, which is from Quora. Okay. Now, is Quora a public company? I don't think so. It's a private company still. But it's the number 4 monthly visitors using AI is Poe. Number 5
because
is
you can use the other models at Poe.
Yeah.
Right.
Yeah.
At number 5 is Quillbot. I'm not familiar with that, but it sounds like a writing assistant.
They were an early one. Yeah,
It's a rewriter.
early.
I just want to add the reason why Quillbot is up, Andy, is I don't know. Remember we saw that dip in the interest.
ChatGPT, you mean?
Yeah. So it's back up. Like if you've seen it's back up.
Yeah.
I think everyone was like kind of like, oh, what happened? It's like, yeah, well, all the students are back. So guess what? And Quillbot is a huge, that is, I remember in the early days, that was the thing that a lot of students were looking at because you could bypass a lot of the detections with Quillbot.
I see.
Right?
Yeah.
It's one of the top rephrasing tools.
Yes, Quillbot? One of the rephrasing. Yes, it was one of the
and it's been an early one as well. So that was the
yeah.
Number 6 is Photo Room.
Nope.
I don't think I've ever heard of that.
I've never heard of it. Number 7 is Civit, CIVIT AI.
Now, Andy, do you think these are this kind of traffic is just because people are? Is that active marketing from these groups?
No,
I mean, for things like OpenAI and everything, we're seeing organic stuff. But
there you go. That's the chart. Go back up a little bit.
Well, I wanted to show this though, because this gives you an idea of all those, but the actual distribution. So you can see everything else is a distant 5th through 100. The market share is dominated by chat. But this is what I think is important to look at. Okay, look at this right here. ChatGPT, billions of monthly visits. Now let's scroll down to the other people in the market. Look at YouTube and look at ChatGPT. It's like a blip on the radar compared to others. And why that's important, not to discredit anything you were saying, it's that it's still not being used by a lot of people, not as many as these other platforms.
Oh, that's right. Yeah. I'll repeat that. The combination of ChatGPT and Character AI in monthly active users is a total of 10 million people. That's very small compared to what's being done with YouTube, Google, Instagram, Facebook, etc.
But again, because AI, in the context of what we're talking about, because of the way that AI functions, the number of people who are visiting a place to use it is not a measure of the entire effect in the industry. right?
That's
Like
right. That's a
AI
good point.
does not
Right.
need to have people using it in order to have like people going to an interface and engaging with it in order to have a
Beth,
disruptive
give us
effect
a case
or a benefit.
example of that. Give us an example of how it propagates without an actual visit to the site that's generating AI.
Well, just all the internal efficiencies, right? I mean, if you have automated systems, if you have a chatbot on your site, so you need, so the chatbot on your site is an interface for the customer, but it's not necessarily an interface for the company, right?
I see what
So
you're saying.
data can get
that
moved.
those numbers that you were just sharing, Robert, those don't include API calls.
Right. This is just traffic to the site, which I want to piggyback on Beth's point. If you notice that last graph I showed, that companionship as a use case has been absolutely like skyrocketing. You can't tie that to a value. You can't tie that to a P&L or product increase, right? It's just the fact that people are using them for companionship. I guess going back to your question, Andy, yeah, if I was an investing company, it looks like I should invest in Pi.ai or those companies that produce those companionship AI.
I think going to just take your point further. So what we can see from the character AI is just look at the behavior trends of why people are doing that. There's a lot of people who, and if you look at other news stories, a lot of people have, I don't even know if loneliness is something we look at, but there's a lot of people who want companionship, who want to connect with other people and have very limited ways to do it for a variety of reasons. And I think if one were to look at an investment opportunity, what are those things in AI that can enable that, like a character AI? Because I just think there's probably a lot of societal and cultural things that are brewing that has led to that maybe AI either could solve or make worse. But from a pure investment perspective, what are those things that will help alleviate or maybe put a band-aid solution on that? That's what I'm starting to think about.
Robert, I can't see the labels on those. Can you just read us the top three?
Yeah, so basically this is showing you that companionship is 45 times more than some others as far as use case or uses. So
companion chat, writing,
presentations,
prosumer,
writing for prosumer, writing for consumer, but all the others are distance.
I wonder 10. What gets included in companionship, because character AI, the number one by 10x, the number one is a chat assistant, right? Which is not really companionship. So I'm not sure if
I don't think character AI is what we're talking about here. I think it's that inside of those tools, they're using it for companionship, or it could be that the other use cases, other companies specifically, like, I don't know how they categorize this. That's a good point, though.
How do you split out chat and companionship?
Right.
Well, because the solution.
This is probably a great opportunity to wrap up with our final point for the day.
I'm going to put TLDR on Jimmy's grave.
At some future, do some future site. So let's do the TLDR. What's the one thing that we're going to see in investment point of view, we're going to see in the AI landscape? Go.
NVIDIA bet on itself in August, and I think that's going to turn out to be a good bet. But
what's going to be a good bet? I'm sorry.
NVIDIA, they bet on themselves. They bought back stuff.
12 billion buybacks,
and they have a company culture of asking their customers what they want. So I think in the short term, but that's not a hot take. That's how we open the show.
Yeah. So I'm not going to double down on my hot take from previous. I'm going to jump to another because I am a card carrying holder of the Apple fanboy group. So I fully believe that Ajax, which is the language model that Apple's putting together, is going to be something that nobody else is doing. And specifically, these lovely phones, although the Fight 15 was worthless update, I believe that because they are
PC. It's not worthless.
What
We've
kind
been
of
waiting for you as
fanboy are
I've
you?
been waiting for you as PC.
I'm an honest one. It's like I reward my team when they do well. They didn't do well this past week. So what I'm trying to say is the iPhone, because of the methodology of Apple, is they're not into the cloud thing. That's not, they never went that direction as a lot of other organizations did. So what I think they're doing is working on a language model that'll fit on their phones.
Yeah.
And they'll operate on their phones, because when they can get the language model small enough to fit on this piece of hardware, or make the hardware powerful enough, that's game changing. That's Jarvis in your pocket. Bet on Apple.
So like
one thing I want to,
LLM.
yeah, well, no, 100% agree with Robert on that, because they're gonna do something that they won't even say it's AI. It's whatever, the term is, and it's just ideally supposed to just work. One thing I wanted to look at, if anyone looking at opportunities, is more of, I also want to take a look at the peripheral of what are the new companies that are going to rise that are leveraging all the tools today. And I think I've heard this on the All In podcast, where those companies are teams of 5, 10, 15, not teams of 500, 1,000. And they can do it more. So maybe start looking at what are the new ones that are going to arise because of the capabilities that they can do now. I think that's kind of where I'm looking at. I don't know, like, I don't have a definitive way to find that, but it's just to me, that's how companies are going to be, like all the VC funded ones that's where they're going to start looking as, hey, you can cut all this overhead costs. What can you do now with all the tools available for you?
My simple two recommendations. One is, if you have any money to invest, make sure that you have some of the major players who are going to benefit from AI in your portfolio. The second one is, there are a lot of companies that are going to be laggards when it comes to developing the capabilities that are necessary to incorporate AI into their business models. And there will be small teams, as Carl points out, who will create a competitive alternative to that that's going to be inherently lower cost. So short the laggards. Identify them first. I don't know how to do that, but
well, they start with N and end NVIDIA.
I just want to quickly say, take a look at the AI solutions, or the AI companies coming up with solutions for the boring problems. I think that's where it's going to be a little different, right? Just solve whatever's going to solve the boring problems. It's not flashy, it's not big splash like all these other companies. Well, look for those companies that are solving the boring problems, and that's, I think, will be the most successful.
And I'm sorry, and I'll have to piggyback on that and do a +1 at TLDR, is companies that are already in business. So the SaaS companies like Salesforce or HubSpot or whatever that are actually investing in AI, then those are great because they have the opportunity to capture their existing user base and give them products that are AI powered. So those are companies to follow too. The ones that are sitting on the sidelines, to your point, Jimmy, shot for those that are laggards, or Andy's point. All right. So today was a great, heated, energetic episode of the Daily AI Show. Stick with us. See you tomorrow. And I don't know how to click the buttons. Anyway, where is it?
This is the greatest closing ever.
Brian, we miss you.
Where's Brian when you need him? Splash screen. There you go. Music. See ya.